Good morning, Mark Soderberg with ADM Investor Services with your morning egg market update. Mixed but mostly higher trade across the egg space here this morning. Beans right now are the upside leader, trading 5 to 6 cents better, just a penny or two off overnight highs. Meal prices, they're up $1 to $2 at session highs, while bean oil currently holding on to 10 to 15 point gains. Steady to about a penny better in the corn. Wheat is mixed, still 3 to 4, maybe 5 lower in Chicago and Kansas City, while Minneapolis is up a couple of cents. Still no deliveries against December Chicago futures, also none for Minneapolis. However, Kansas City deliveries did tick up to 7 contracts. Still fairly light in the corn at 76 contracts, 123 for the oil, while meal deliveries have also slipped to 0. Speculative traders were mostly sellers across the ag space. Yesterday, we had them selling 7,000 corn, 6,000 beans, and a couple thousand contracts each in wheat and meal, while they were net buyers of a couple thousand contracts in the soybean oil. We've got that oil position now back up to roughly 25,000 contracts. We also thinking the money managers are still short. In corn, about 140,000, 82,000 in the meal, and nearly 90,000 contracts in Chicago wheat. We guess a speculative long in the soybeans right now is still holding at just under 100,000 contracts. This afternoon's CFTC update will get us caught up through positioning as of October 21st. Yesterday's export inspection data, which has not been delayed during the government shutdown, that continues to show strong demand for U.S. corn. Year-to-date inspections are continuing to run 71% over a year ago versus USDA forecast of up only 9%. So I think we could make an argument for another increase in next Tuesday's WASI report. So I lean towards higher exports, partially offset by lower feed usage. Bean inspections still show nothing headed to China, while year-to-date inspections are down 46% versus USDA forecasts of down only 13%. Even with China's return to importing U.S. beans in recent weeks, I suspect we'll still see another 25 to 50 million bushel cut in the USDA export forecast. Wheat inspections at 486 million bushels are down 20% year to date. Up 20% year to date versus USDA up 9%. Some much needed rain appears to be headed for growing areas in northern Brazil over the next week to 10 days. Despite this, we have seen a few lower production forecasts, both StoneX and Dr. Michael Cordonier lowering their forecast this week. 176 million metric tons for Cordonier, 177.2 for StoneX, still both above the USDA's 175 million metric ton forecast. We also seen them cut their corn figures a little bit as well, 134.4 and 138 for StoneX and Cordonier respectively, both above the USDA forecast of 131. Inside trade for March corn here overnight as it hovers very close to its 50-day moving average at 444 3/4. Resistance is a November high, that at 457, with support at the 100-day moving average at 435 3/4. Overnight, GM beans did hold support at its 50-day moving average, setting up a nice little bounce here. I suspect we'll need to see further evidence of Chinese buying to hold this recent uptick in prices. Meal held support above last month's low, while January oil shot up to a 2.5-month high. New six-week low for March Chicago wheat overnight. Algeria, Thailand tendering this week. For wheat, Jordan passed on making any new purchases in their recent tender, while Korea reportedly bought about 65,000 metric tons at a snap tender. Thanks for listening, everyone. I hope you have a fantastic day.